Good morning, trading world. Today is November 26, 2021, the day after Thanksgiving. And thankfully, it's only a half of day of trading today. With that, it is 7:27 a.m. and just like that, 1, 2, 3, the immediate uptrend has been broken. Let's get into the pre-market outlook. Earlier this week, I touched on identifying trend change using an easy 1, 2, 3 criteria. Actually, on the 24th, to be exact, is when I introduced that. This is something from the Dow theory. If you follow trend, there is a lot of interesting things on that regarding the Dow theory. Now, let's go back. I have up here a 90-day 4-hour chart. And on this 90-day 4-hour chart last week, I really should bring up the video from last week. We'll go through it real quick. I'm going to bring up a drawing that illustrates trends, something that I keep up with. Let's see, the current. All right. This represents the current trend. These two lines right here represent the channel that we're in. And this is a trend line that represents the current trend that we're on. All right. And as we said before, using the easy 1, 2, 3 criteria, we first look for a break in trend. So let's make that a little bigger. Now, the first thing that we see here, right here, we break trend. That's number one. Number one of our 1, 2, 3 criteria. Number two is a test of a preceding high or low. So, as you can see here, this was the high. And we came back up. That's the high here. An important part of this high is identifying the low here. So from this low, we're trying to go back up and test the preceding high. But instead of breaking through the preceding high, we break the low, or the preceding low. So we have our 1, the trend break. We have our 2, the retest of the preceding high. And then, most important, we have 3. And that's the break of the preceding low. That right there tells us that the intermediate trend has changed. And when I say intermediate trend, you have to understand and identify, that there are different trends that you follow according to the time frame that you're looking at. So we have a short-term trend. That's anything from your intraday, hourly, 4-hour, and down. Then you have your intermediate trend. That's anything from your 4-hour time frame up to daily. And then you have your long-term trends, which is weekly to monthly. So right now I'm letting you know that the intermediate trend has been broken. So what this tells us is that we're in store for a pullback of at least 3 to 5% before year end. And even before this happened, I was looking at something that was really not going to take place until the 30th of this month, but I was looking at a lot of things change and a lot of selling that would probably get started on the 30th of this month. So it kind of puts me in a quandary, knowing that what I was seeing on Tuesday, which is the 30th, and this kind of early expedite of things to come. So we can start looking for this pullback. Now, as far as today, let's go back to 30-minute time frame so that we can kind of look at things to come for today. All right. Based on how things may play out today, what I will do, because again, it is so hard to map out what could possibly be in store for today. So I'm going to give you key levels of support and key levels of resistance for today. And the way we use that, these are the areas that we watch our indicators and internals the hardest to see if we have some type of divergence, which will let us know that it's a possible reversal happening at that reaction area, or convergence, letting us know whether we're going to continue through that area. Looking at how today has turned out in the pre-market, most of the damage has been done for today, meaning that I don't see a lot of more selling off below the 458 or 456 area for today. Especially with this being an expiration. So a lot of the damage has probably already been done. So at some point, I do expect to see a rally at some point today. So that rally takes us into resistance areas. The first resistance area we get to is 463. The second one is 464. And the last that I see today is 466. If we get above 466, thank the heavens for it, and immediately begin to put on short positions. So that's how I'm looking at that. Support levels. Coming into the morning, we should already see support at 460. However, we could somehow take a drop below, and then the next level of support is going to be 458. Should be high 458s. Shouldn't get too deep. But if so, we could burst all the way down to 456. Remember that the market makers expected move for the week. I came in before Thanksgiving saying that we had a lot of movement to do because we were going to see one of those areas one way or another, which the upper edge was 476, the lower edge is 461. We are right on that lower edge. And because we are on that lower edge, it is going to take a lot to push us off of that edge. It's like a cliff. It's going to take a lot to push us off of that cliff. And there is kind of a degree of variance where even though the edge is 461, I'm willing to say that down to 460, we're still kind of within that degree of error where I consider us still to be on that market maker's expected move edge. And in order for us to break off that edge, higher or lower, we're going to have to see a huge volume spike. So, my advice, come in, let's watch this volume spike. If you can color your volume bull or bear, green or red, however you do it, watch for that volume spike. If we're going up and we see lots of bull volume and it surpasses the average of what we've had, it is quite possible that we'll break off and we'll begin to rally. However, if you see the opposite, we get a lot of bear volume and we begin to trace down into 460 and you see that volume climbing, it is possible that we can break off and go lower. But again, it's going to take a lot to get us off of that line. So that's what you watch for today. And my other advice is, because I was looking at a lot of the selling to begin on Tuesday, the 30th of next week. If we start to rally today, I'm not sure if this rally is going to have any follow through into Monday. However, what I am sure of is that we've already received the right sign that more selling is coming. So, safely, I would be looking to short into the rallies. And because we're not sure whether we're going to end up back at 463, back at 464, or above 466, the safe way to short these rallies is by using put verticals. Buy the high side or high put and sell the target, the lower put. And this way it gives you a fixed amount of risk, much less than just spending $400 or $500 on a single put and risking that individually. And you want to give yourself time, at least 14, we'll say at least 7 to 14 days. For those of you that trade actively, 7 days. For those of you who are not as active, you want to see longer time. So, that brings us to the end of the day because it's going to be a short day. So I'm kind of expecting, most people to feel like I felt. I really wasn't sure whether I was even going to show up and trade today. But I got up anyway, and thank goodness I did. I'm already set with a bunch of put verticals that I've had in the works for a while. So this is going to be a great day for those. And I'm definitely going to be looking to get more on. So everything I've pretty much been doing has been intraday trades with options, and more so futures. But now this is where we can start to enter our longer term swing trades and understand that there's a lot of selling coming, so we want to be on that sell side with these longer term swing trades. With that, as always, know your risk. Wishing you a successful day of trading. Have a great one.